All right, Bulls and Bears, welcome back to another report. As usual, we've got another dose of economic reality, and I've got a lot of news and data that we need to get into today as this economy continues to go further into the twilight zone, into the stratosphere. Um, from the outside looking in, people not really paying attention to the data and the numbers and the details, everything looks pretty normal. It almost seems like it could go on forever, but no, it's not going to go on forever. Something big is going to pop, I think, this year in 2024. Where is it going to pop at? Is it going to be real estate? Is it going to be the consumer? Is it going to be the banks? What is it going to be? We're going to find out, of course, but let's get prepared for what's coming by looking at some information that I have today. First of all, how are people still living? 1 in 5 people maxed out on their credit cards. Shocking numbers I'm going to show you here in a few minutes. U.S. banks just suffered an $80 billion deposit decline, folks. That answers the question, how are people still buying stuff? How are they still paying their rent? Folks, people are draining their savings accounts. They're draining their checking accounts, pulling emergency funds out of their 401k. 2024 is going to be another record, beating 2023, which was an all-time record of outflows of emergency funds from 401ks, folks. This is how people are getting by, running up massive amounts of credit card debt. And now many people not even able to run up anymore because, again, 1 in 5 people maxed out on their credit cards, right? So you may think nothing's changing. Everything sounds the same every time you hear the news. Sure, we talk about the same topics, but everything is getting closer and closer to the edge, folks. And if you're talking about the edge of a cliff, you can't just keep going towards the edge without something bad happening eventually. And we're moving closer and closer and closer. Sure, they can come out with a lot of different programs, kick the can down the road, forgiveness over here, cancel payments over here, you name it. They can try to do it. But eventually, the rubber's got to hit the road. We see the stock market ripping higher. We got 40,000 close on the Dow Jones. I know it touched it, Thursday? It touched 40,000. Closed just below 40,000. Today was above 40,000. But that's not all. In addition to the stock market, we've got falling yields. 10-year yields are falling. We're going to talk about what China is doing now with U.S. debt. They are dumping the debt. We have, this is nice to see. We have gold, $2,419 at the close today. We've got silver, $31.77. Did it touch $32 today? Not quite. But if we look back, we see this is a massive move for silver. And this is the highest that we've seen going all the way back here to 2012. So we're at about a 14-year high, rather a 12-year high in silver. And where's it going to end, folks? Are they going to unleash silver pretty soon? So no more naked shorting, no more derivatives and contracts pushing the price down. Well, I'll tell you what, when you buy silver physically, you fight against the manipulation that they've been pushing the silver down with for so long, right? So you can fight against this by doing that, and it's a great investment. Like I was breaking down in our last report, you're up over 100%. If you bought silver when we first alerted you to this, back at $15. Some other news though to get into. China dumps the largest amounts of U.S. treasuries in history. In history, folks, people are dumping debt, the U.S. dollar denominated debt. Another record. And, we see this de-dollarization happening, folks. This is part of it. And you think inflation's bad now, just wait until more of these BRICS nations completely dump the dollar. And what's going to happen when there's no more buyers of U.S. debt, right? It's going to get very interesting. Not next year, not in 5 years, this year. I mean, these things are happening now. These are some big things, basically all coming to a head. All right, let's shift over here, transition a little bit to the housing bubble. We know that the housing bubble, big topic of discussion. Everybody has housing costs they have to contend with. Florida and Texas, just as we said right here, are going to be the two states that likely lead the bursting of the bubble. Now, I wouldn't call this a bursting because it's not really a crash, but prices are coming down pretty significantly We know that those two states saw huge inflows of people from coastal states, especially California. And we've got a report here. Florida and Texas show signs of falling home prices, finally. The problem is, though, in 90% of markets, prices are still up year over year. I should say it's a problem. If you bought a home and you're looking to flip it or something like that, that may be good news. But for most people waiting for more affordable homes, it's not good news. But when you look at home prices compared to the peak, which was August 2023, we are down. So we'll see what happens this August, because that's going to be the key point to compare the all-time high to the all-time high year over year. We're going to keep an eye on it here for you. Finally, some good news. Some people say on this channel that I never have good news. Well, I think you're wrong, because look at this. $5 value meal is coming back to McDonald's. Yes. Will I eat there? No. If you could set a hamburger out and even the bugs don't want to eat it, and a year later you go back and the hamburger's still there uneaten, folks, you know something's wrong. I believe that's on the internet somewhere, maybe even on YouTube if you search that. Bugs don't like the burger. I'm not sure what the title is, but I've seen that video. It's time-lapsed, and that's pretty scary, pretty alarming. $5 value meal coming in June. Going to have a McDouble, 4 chicken nuggets, fries, and a drink. Oh, okay. A month-long promotion comes at a time when restaurants are finally beginning to feel the long-anticipated consumer pullback. Yes, consumers are finally starting to pull back. Sorry, I've got a washing machine going off in the background. I usually wear my headset when the wash is going. I apologize if you heard that. Anyways, let's get back into it here. Folks, places are going to have to start dropping prices. Now, they have to contend with inflation, so it's not going to be easy. And in California, they're having to pay $20 an hour to their workers. We're talking about fast food places. But if the consumer is getting tapped out and pulling back on spending, how's this going to work out? Right? How's this going to work out? Food prices elevated, broke consumers. Something's got to give. They're going to have to cut their prices so people actually can make their dollar stretch more. But they got to raise prices to afford these wages. Is the CEO going to take a big wage cut? There's going to have to be some big major decisions made in that area. All right, folks, take a listen to this here. This was put out over at the Economic Collapse site here. Out of control inflation. It now takes $177,000, closer to $178,000, for a family afford to live comfortably in the U.S. Now, by comfortably, I think they mean being able to pay off your bills in full every month and still put some money away. That's the way it should be. That's the way it's supposed to be. But right now, 70% of the population is not able to save any money. In fact, going deeper and deeper and deeper into debt, right? So not only are we not breaking even, for the most part, most people going deeper in debt. He says it like this: I never imagined that we would ever see a time when it takes $178,000 for a family afford to live comfortably in the U.S. Unfortunately, that day has arrived. Our leaders have been pursuing highly inflationary policies for years, And folks, a lot of it's our fault. A lot of it's the consumer's fault. We want to consume. We don't know when to say no. If we do know how to say no, we don't, because maybe we're addicted to spending. And can't just blame the leaders. You know, I know this article goes into more about the leadership and the interest rates and the money creation and all the things that happened, especially over the last 4 years, really starting in 2020 when you look at an inflation chart. But folks, this is all about money creation. It's all about the debt. Does anyone here think it's a coincidence that the cost of living and prices rise very quickly at the same time debt rises very quickly? Folks, this is all borrowed money pushing the cost of living up, pushing asset prices up, pushing the stock market up. Borrowed money, right? So when the money spigot gets turned off, what's going to happen? Big, massive correction. The guess is, or the question is, and your guess is as good as mine, when does the spigot get turned off? Well, we're going to have to see something big, and I'm still holding to this year. I think we're going to need to continue stacking, because I think this year. Let me know your timeline, but I've said before, this year. We saw what happened in 2020. So keep stacking, folks. You know, embrace. Pick your word. You know, what are you doing? You're preparing for this. Let me know down below. I hope you guys like the news today. It's out of control, folks. Inflation. The dollar getting more devalued with these countries dumping the debt, record amounts of debt being dumped by China, further devaluing the dollar, another inflationary force, folks, right? So as the currency crumbles, prices continue to rise, but you have the tapped out consumer on the other side that pretty soon, is it going to be half the population that's going to be maxed out? And when people stop shopping, will prices continue to go up? It's going to be very interesting, folks. We've never seen a time like this. You know, people say history repeats itself. It may rhyme, but we've never seen the situation like this with the current amounts of debt. The inflationary versus deflationary forces, unprecedented, folks. We're going to all live through this together. Hope you guys are good. Stay well. We'll talk to you on the next report. Please make sure you subscribe, and we'll see you down in the comments. Hopefully, keep stacking. Bye for now. Peace.